Guys, welcome back. We're still within the Free State Prelim paper for the year 2023. We are now on question 2. I'm not going to do much because I've already done a number of videos, so I don't want to overwhelm you with so many of them. So on this question, I'm not going to be doing much calculations. I'll just be explaining. It is very important, and as I've been saying, that you need to know your formulas by head and not over rely on the formula sheet. All right, so in this question, there were a number of calculations that were to be done. The first one was the acid test ratio. Remember, that is your current assets minus inventory as to current liabilities. And as you can see here, the easiest way was just to add your note number 5 and note number 6. That is your receivables and the cash and cash equivalents. That would then make it very easy. So if you see, this is your cash and cash equivalents, and this is your receivables as to your current liabilities, which you would find over here. Okay, so as I was saying, these are your receivables and cash and cash equivalents rather, and this is your receivables, and this is as to your trend other payables in 2023, which is your 1,598,000. Remember that your answer has to be as to 1, because it is a ratio. So the same again with the debt equity, that is your non-current liabilities. As you can see here, your mortgage loan, it is 1,420,000. That is what we have been given there. As to the equity, as to the owner's equity, there is the shareholders' equity, 4,478,300. That is what we find there. Then you get your 0.3 as to 1. Okay, I'm going to move on to the next one. That is the return on average shareholders' equity. So it is very important. You can see here the examiner has brought this particular calculation as well. And I think if you remember, we also saw this in the Free State Prelim. All right, so we're going to be referring to other papers that we have done as we are going. And please remember your formulas, very, very important. Okay, I'm not going to spend much time here. And even here where they are doing the value of closing stock, when you come to the reconciliation between profit before tax and cash generated from operations, this one was a bit easier. You just have to continue practicing. Remember, it is your profit before tax, and then you are adding your depreciation, you're adding your interest expense as well. Remember, these ones you're adding, hence you end up with your 2,760,000. Then when you come to changes in working capital, your changes in working capital involves 3 things. The first one, it is your inventory. We're talking note number 4. Then your debtors, we're talking note number 5. And then your creditors, that is trade and other payables, we're talking note number 9. Okay, but then when you come to your debtors and your creditors, I'm going to show you what the examiner would normally trick you with. In your inventory, you are now simply saying, if you look in 2022, it was 1,281,000. In 2023, it's 1,350,000. You can see that your inventory has increased. An increase in inventory is a cash outflow. Hence, you see here we have brackets. An increase in inventory is a cash outflow. Hence, we have brackets. But the other way that you could have simply got this answer is to say, whenever you are dealing with inventory, inventory is an asset. Whenever you are on assets, you will say your previous year, which is 2022, minus your current year, which is 2023. Whatever the calculator gives you, then you consider that answer. In other words, we are saying our previous year, how much was our previous year? You can see this is our previous year here. So I'm going to come here, I'm going to say our previous year was 1,281,500. So we're saying previous minus. Then we subtract the current year. The current year is 1,350,000. So the current year minus 1,350,000. Whatever the calculator gives you, you can see the calculator is giving you a negative. That means it's a cash outflow. Then I'm going to come and put brackets here, cash outflow. Okay, that is the calculator method of determining whether it's an inflow or an outflow. All right, let's come now to the debtors. When it comes to the debtors, as you can see, here is the receivables. We do not touch SARS income tax. So we are only going to look at our 1,420,000 and the 35. 1,420,000 and the 35, which gives us 1,455,000. Okay, and then we come here, we do the same again. It's 1,554,000 and then the 26,000, which gives us 1,580,000 over there. So debtors are also an asset, so we would say previous as well minus current. That's why you say I have taken the previous year's amount, which is this one, and subtracted it with the current, which is the 1,580,000. And whatever your calculator gives you, you will get the right amount. So in this case, the calculator shows us a negative, hence you see I have a bracket over there. Then lastly, in our creditors, we will not touch shareholders for dividends. We will not touch SARS income tax. When we do this note, we will only consider our trade creditors there. Now, this is a liability. So when I come to this liability, I am now saying, remember assets, I was saying previous minus current, but this is a liability. So in the liability, I'm now saying current minus previous. All right, let's go look for the calculator. So we are now saying, which one is my current? My current is 1,347,000. So my current is 1,347,000. That is my current, this one here, 1,347,000. Then I say minus my previous. My previous is the 1,586,000. And then how much do I get on my calculator? A negative 239. Hence you see I have brackets here. All right. A decrease in creditors. A decrease in creditors means we have paid creditors. We pay, it's a cash outflow. Hence you see we have brackets there. The calculator method simply says current minus your previous, and then you would get the right amount. Okay, I'm going to quickly run to the calculation of fixed assets purchased. There are several ways that we can do this one. Very many ways in which we can do this one. All right, one of the ways in which we can do this one is to open an extract of note number 3, but the other way is to open a fixed asset account, and this is what happened here. So what you have here is your fixed asset account, but this one is at carrying value. So this is your fixed asset account here at carrying value. Okay, so if I come to it, what I can see here is the first thing that we have here, this is the balance brought down at the beginning, which is your 3 million here. And then you're going to have your balance at the end, which is what you see there. That is your carry down here, 4,178,000. And then here you're going to get your depreciation. We must get depreciation. There it is, 185,700. So here you have depreciation, 185,700. And did we purchase any asset? Okay, so we're told fixed assets were sold at carrying value, 368. So this becomes your disposal at carrying value. This is what we were looking for, the assets that were purchased. The other way that was done as well is the line method, in which you can see here, where you take your 4,178,000, that is the fixed assets that we have at the end. Then we come and then we add the 185,700, that is your depreciation, and you also add the disposal. Then you subtract the amount that you were having at the end, at the beginning rather, that is your 3,532,000. Then you get your 1,200,000. So the other one, as I said, is to open an extract of note number 3, where you start with the carrying value at the beginning, and then that space in between, that is what you can then do. Okay, I'm going to stop this video because it is overlapped now. Then in the next one, I'm going to see if I can touch a bit on this one, but we're about to conclude now.